Guys, this is Oba FX Trading Academy, and welcome once again to my YouTube channel where we do mainly the top-down analysis of different financial securities. And today we're going to be looking at a Deriv synthetic index volatility 10 index. And as you all know, I do my top-down analysis using pure price action trading strategy where we work our way down from the higher time frame to the much lower time frames to see if we can get trading opportunities. So without wasting much time, let's get into it. So currently I'm on the monthly time frame of this particular index, and all I try to always do from this time frame is to get my directional bias, mark out my key zones, but basically to get where I feel the market is headed currently. So, but just mainly looking at our chart, you can see that this particular index that has been making a series of lower lows, lower high, lower lows, lower high, lower low. It's made a lower high, lower low, then a double equal highs. Then it's made a higher low here, then a double bottom, and it tried to obey the rule of double bottom by breaking above the neckline of the double bottom. So if we go to the line chart, you can see that it made a double bottom here. It broke above the neckline of the double bottom, shot up, but instead of coming back to respect the neckline and probably just continue upwards, the price did the exact opposite by breaking through and taking out the double bottom itself, and then price continued in a downward direction. So we had like a new lower high, then a lower low. Currently we have a lower high, and the market seemed to be heading downwards. Now I use the word seem to be heading downwards because if we look at the last candle on this monthly time frame, there has been like a big rejection. So this automatically changes my directional bias. So because of this big rejection I'm seeing on the bearish candle, then my initial thought would be that buyers are currently pushing the market upwards. So in order to give credence to this thought of mine, the next thing to do would be to go to the weekly time frame. So now on the weekly time frame, then I can see that I have a double bottom here, which now gives me confidence that my initial take from the rejection candle that I saw on the monthly time frame has something to it. Now, how do I mean? If we also look closely at this most recent candle on the weekly time frame for this trading week, we can see a big bullish engulfing candle here. So which means that even if the direction of the market is not changing automatically, but what we can say from what we are saying here is that we have a double bottom, which is a strong bullish reversal pattern. Then we have a bullish engulfing candlestick pattern here, which is also a strong bullish reversal pattern. So this means that the market would likely push price up for a while before anything happens. And of course, we know that the basic rule for trading double bottom is that we expect price to come to the neckline of the bottom, break above it. We'll be expecting price to break above this neckline, make a retest, might even come down here and then continue upwards. Now, remember, we're still on the weekly time frame, so all these postulations may take a while to come to pass. In other words, may take a while to play out. But just our most recent bias would be our most recent bias now is that the price of the market is being pushed upwards. You can call it a retracement or whatever it is, but we have a double bottom and then we have a bullish engulfing candlestick pattern. So the next thing to do for us to get maybe a proper structure of what's happening or the most recent structure of the market would be to go to the daily time frame. Okay, now on the daily time frame, we can see that we now have like a zone from where the market is being rejected. But there's something that maybe by way of experience that I could spot immediately, and that's the fact that we can have a head and an inverse head and shoulder pattern. So if I map somebody just merely looking at this chart now might be asking me where did you get that from? But when I map it out and we go further to the much lower time frame, then it may become much clearer. And of course, we also know that the inverse head and shoulder pattern is a strong bullish reversal pattern. So now we're looking at this on, is this not responding? So we're looking at this on the daily time frame. So we're looking at this on the daily time frame. So let's map out the inverse head and shoulder pattern. This would be the left shoulder, the head, and the right shoulder. And of course, we can see the bullish candles pushing price upwards. If we go back to the line chart, now price might end up coming to this point and then continue in the downward direction. But just like I said, our most recent structure of the market to work with, if we are to look for trading opportunities in the much lower time frame, is what we are seeing now. So if I go back again to the candlestick chart, we can now go back to the H4, go down to the H4 time frame. So if we take this out, we can now see the inverse head and shoulder pattern much more clearer. Let me use this tool. The other tool is messing up. So this is the left shoulder, the head, and the right shoulder. And of course, we're looking at this point as our first destination, which means automatically this would be what? The neckline, which has just been what? Taken out. And of course, we know that for inverse head and shoulder pattern, just like we explained the double bottom, once the double top initially, once this neckline is taken out, we expect price to come back to make a retracement to the neckline, and then we can now look for trades in the upward direction. Also, one thing to take note of is that the price might come to this neckline, maybe drop down a bit before going upwards. Then also, in this case, we can now include our trend line. So we can see that if everything should play out just the way I've analyzed, once we observe a retest back to the neckline, it will also be making what? A third touch of the trend line. So that means we have like an inverse head and shoulder pattern as one confluence. We have the neckline already taken out. So all we now need to do is to wait for the market to make a retracement back to this neckline and maybe probably make a third touch of the trend line. Then we can start looking for our trades in the upwards direction. So if even to add like an extra confluence, I can include a counter trend line here. Now we can see that the counter trend line that would have helped us to enter this particular trade, the counter trend line has just been broken and retested. So if I had done this analysis much earlier and I had caught this scenario here, immediately I see this, I would have taken my buy positions here, and then of course my stop losses would be underneath this. So this is my current outlook, my current analysis for volatility 10 index. For those of us that are into the trading of Deriv synthetic indices, you can, whenever you come across this video, you can watch closely to see how it plays out. We've just missed the first opportunity to enter the market, but albeit we have like an inverse head and shoulder pattern, all we need to do is when the market retraces back to these zones that I've mapped out, you just go to the much lower time frame, the 1 hour or 30 minutes time frame, and then you take your buy trade. So like I said, this is my own analysis. You can compare this with yours as always and see if it makes sense, or if you have like an opposing view as regarding your analysis, you can drop in the comment section. If you also want us to look at any assets, maybe commodity, cryptocurrency, or forex currency pair that you would like us to analyze in our subsequent videos, you can also put that in the comment section. And don't forget to like, share, and subscribe. Thank you very much for stopping by, and cheers.